Yo, what's up? Just recorded this pod with Brandon. Unfortunately, the first half of the episode got cut off. We were talking about some really cool stuff. So here's the second half. We talked for like an hour and a half, but the 45 minutes that you're hearing right now is somewhere in the middle. But we'll cover the stuff that we covered earlier next week when he gets in town. Enjoy the EP.
Welcome to Thriller Bitcoin. Welcome to Thriller Bitcoin.
Getting interrupted by the feds.
Yeah, I know.
This is why you can't talk about these things.
I know.
So you were on a roll. You were saying, gosh.
I was saying basically like I like that Trump was essentially saying like he doesn't want the dollar to lose purchasing power. Right. And that, you know, the way that the kind of the political party that I view that is in power now, and like, you know, a lot of politicians prior, they were more inclined to kind of do whatever they could to stay in power, whether that's like kind of inflating the currency and like having it devalue and lose purchase power over time. I'd rather have somebody in power that's trying to delay that. So we kind of have a slower transition. Granted, there's the accelerationist in the Bitcoin community who say just like burn it to the ground so we can rebuild it. But I think, you know, as we kind of laid out, that scenario very much worries me, especially now with traditional finance coming in. Because then it's like BlackRock will basically have all the Bitcoin or not, you know, very few of it. And then like, you know, a lot of our loved ones who don't have Bitcoin and we can't seem to convince or get through their, you know, hard heads about it. They're going to be the ones that's struggling, and how long it takes to rebuild, whether that's 1, 2, 5, 10 years, 20 years, we don't really know how that scenario really plays out. So to me, I think, you know, you kind of want somebody in power who's like going to try to keep the US dollar in power as we can kind of have that slow transition. And to be quite honest, like Bitcoin is not ready for, you know, 8 billion people to be onboarded. So I get it, you know, it's a gradually then suddenly, and we're going to see Bitcoin's probably number go up, you know, quite a bit here. But I think, you know, you want somebody that's in power that's kind of trying to delay that process as much as possible. Although I think it's somewhat inevitable at this point.
Yeah, I just watched a documentary. It gets pretty crazy. There's this part where they were talking about the Great Depression, and there was like, what was like, how was the Great Depression before? And they're like, it was weird. One day, everybody had money, and the next day we didn't. And even the people who thought they had money didn't have money. And that part resonated with me when they were talking like that. I was like, oh shit. Like,
yeah.
I think the closest thing I've ever seen to that is when we had the snowpocalypse, where it was like one day here in Austin, we had power and water and food. And then the next day we didn't. And then the next day we didn't either. And then the next day we didn't either. And then eventually everything swung around like 3 or 4 days later. So that's the closest I've ever seen it, like here recently. And nothing happened. Nothing went crazy or anything, but it just kind of goes to show that like at that point, no one was buying anything. Everybody was just giving it to each other because we thought it was going to be like a week. But what would happen if that thing escalates to like a month or two? Are we still charitable? I don't know, man.
Exactly. And I think that like if that was the case, we probably wouldn't be, unfortunately.
Anyways, let's jump into your macro predictions. These are good. These are really good macro predictions. You published this on February 23rd, 2024. Let's run through them. So the TLDR for your 4 predictions are, let's jump in the first one. The Federal Reserve will not lower interest rates until Q4 2024. Dude, why are you saying this? Why are you putting this out there? Yeah. I thought they were supposed to lower here coming up.
The pivot brains are going to be pissed at me here, but I mean, like, it's Jerome Powell his mantra has been higher for longer, right? He looks up to this the former Fed chair Volcker, who basically raised interest rates super high, kept them high to try to combat inflation. By all accounts, the Fed is looking for something to break, right? They rose interest rates at a high rate. A few banks failed that were poorly managed. Granted, there were bigger banks, but there were also banks that were doing stuff that they could equate to like crypto or tech or something like that, and they could kind of point the finger at that. I mean, the way that they managed risks at those banks that failed, like Silicon Valley Bank specifically, was very uncommon. And if somebody would have seen how they were managing risks prior to that, there probably would have been some regulations coming down onto that bank. But in turn, they failed, right? So the banking sector, I don't think is going to really be going anywhere at this point. They're prepared for what's ahead. They're kind of set the standards to change a little bit in order to, avoid, more bank failures. And I think they're doing okay. And, if you look at the numbers from the job numbers and all that kind of stuff, say what you want about them, right? Whether you believe them or not, it's something that the Fed looks at. The consumer's still spending. The consumer still thinks that, or still has jobs, whether it's 1 or 2 or whatever. And the job numbers are still kind of fine. And and the stock market is ripping and rolling. Like, as much as we don't want to equate the stock market to, what the overall market is, the stock market was up more this year than it was in 2020, more in 23 than it was in 2020, when the Fed printed, 40% of the overall money supply. So, I guess, what does that tell you about the way things are going? So I think that, the Fed looks at all these different factors, and Powell wants to keep it at the rates as high as he can for as long as he can. And so, initially he said 2025 is when he would do that. And in a meeting earlier this year, he said that they talked about the timing of when they want to lower interest rates. Right now, the market, I think, was like kind of anticipating maybe a May cut. The market has been basically calling for an interest rate cut since last year. I don't think.
And when was the last time he cut? He hasn't cut since what, 2023?
Yeah, he hasn't cut in, I don't know, well over. No, he didn't cut at all last year. Like, since he started raising rates, he hasn't cut yet. So 22 was the last year that he cut? Yeah. So, interest rates were basically at a 0 interest rate environment, all up until I think like late 22, I want to say.
Wow.
But and the market's been wrong like ever since he started raising interest rates. They said he couldn't do it as quickly as he's going to do it, and he did it. And then they said that he's going to pivot and kind of flip the script and go the other direction, and he hasn't done that yet. So I kind of think that this is just his higher for longer moment, and that he's gonna probably cut interest rates when it's too late, because we're human, and he's gonna look at backdating data. But I think that that's where he's going to kind of stick his foot down to try to do that. And he's, it's weird. He's going on like 60 Minutes and all these other places saying that we're screwing the younger generation with inflation and like all this stuff. So he's kind of like parading around, like saying that there's a lot of issues with what's going on. And then, like it's his policies that are kind of like affecting all this stuff. So I don't know.
Yeah, he's trying to say it's not his fault.
Yeah, basically.
That's what it looks like to me.
Another economic hangover after the pandemic is a sharp increase in the national debt. 30 years from now, it is projected to be $144 trillion, or $1 million per household.
How do you assess the national debt?
We mostly
try very hard not to comment on fiscal policy and instruct Congress on how to do their job when actually they have oversight over us.
But is the national debt a danger to the economy, in your view?
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability, and sooner is better than later.
Yeah.
That's
I don't know, man. I guess we'll see. But
that 60 minutes interview was kind of, it was very sad to see him do that.
Yeah, it didn't make any sense to me, but I do think that he's going to try to keep interest rates as high as he can for as long as he can. And I think if it occurs this year, it's going to be in Q4. I could also see it something like, maybe it doesn't even occur this year.
Wow.
But,
are you the only person saying this? I feel like I don't hear anybody else saying this.
I've had a few people kind of come on. I mean, it depends where you're at, right? I mean, like most Bitcoiners are fairly bearish on like the overall macro environment. They think that, like everything's going to crash tomorrow. When in reality, like there's just a lot of like the charade of the overall market is kind of like continuing to go, right? I mean, like I always think of that scene in Wolf of Wall Street with like Matthew McConaughey, where right before he starts like banging his chest, he's like, he like tells the main character, I can't think of his name right now, but he tells the main character like, look, you convince somebody to buy the stock and you sell them on this dream, right? But we don't really know if the stock's going to go up or not. It's all a charade. It's all fugazi is kind of how he says it. And that's kind of how I see the overall market now, right? I mean, like there's still like, there's cracks under the surface, like credit usage is definitely going through the roof. Student loan payments have just started to open up. Personal savings is down, but people are still going out there and spending, and people are still having, still have jobs. At least it's making it, the numbers are making it seem that way. And so, with all that being said, I think that, everybody can kind of see the signs in the Bitcoin community, and they think that these signs are going to make sure that are going to, pop to the surface quickly. Me, on the other hand, I think that it's going to be really convenient where, whoever's in office or whoever becomes in office next is the one that's basically going to have to deal with all these shortcomings of the previous office or of the current office in power. So whatever Biden does and the mistakes that he's made, he's not going to really have to pay for it. It's going to be the next president who comes in and they get to point the finger at them. So that's my long-winded answer as to why I think that that's going to happen. But it's still kind of like the charade is still going to go on, I think, for at least another year or two.
So this is so your number one was the Federal Reserve would not lower interest rates until Q4 2024. I think you've pled your case on that. I don't know. Yeah. Second one is the stock market will continue to grow throughout 2024. You kind of touched on that a couple of times already.
Yeah.
What's your thought process behind that?
Yeah. I mean, I think like that's still going to be something that, is still going to pump, right? I mean, like we saw the stock market get held up by the Magnificent Seven, right? And I mean, I use this example in the article, and it's kind of cheap because I wrote it in like February. Because I don't know, just with everything going on, I did it a little later. But nvidia is up 63% at the time I wrote this article, and I still think it's like continuing to go up, right? So like nvidia, a lot of these artificial intelligence companies are still going to pump. And to me, I think like we've seen a few different cycles. We obviously had like the .com boom in the early 2000s, the housing crash in 2008. I kind of like to call like, maybe like 2015 to 2020 before the COVID crash, almost like the crypto boom, where all these VCs and like companies, you would see just insane valuations where they put, blockchain behind something, and everybody in the Bitcoin community would scoff at it, but somebody would go throw billions of dollars at them, and then, they'd IPO and the stock would go crazy. I think that we're kind of getting to that place in artificial intelligence where any single company that goes behind AI is going to start to, get a bunch of people in on it, right? Whether it's valid or not, I don't really know. But at the end of the day, a lot of the stock market like kind of runs on delusion. Like it's a lot of the hopium, right? I mean, like we like to use that phrase in the Bitcoin space, but that's kind of all the stock market is, right? I mean, it's like the status of the value investor, right? Warren Buffett, those times where you can kind of look at things like PE ratios and stuff like that. That can't really be used to explain the stock market anymore, because like the things that perform the best are always tech, and tech has come to be like too expensive for somebody like Warren Buffett. And he got into Apple, but way before it was kind of ripping and rolling earlier, and he brought it up before too. And so I think like the traditional metrics of the stock market, where it could kind of be explained, are kind of dead, just because of like, a lot of retail investors getting in there, a lot of people looking at tech and like kind of the parabolic movement that a lot of these tech stocks have taken. So I think, overall, the stock market delirium is going to keep going on. And to be honest, I was bearish last year. I thought we were going to see things come down. So I don't know, maybe I'll be wrong again, where it's like I'm just on the other end of the spectrum where I'm like, this can't keep going on. And then finally I bend the knee and I'm like, okay, fine. Maybe it still does. And then it flips the other script. But I think, we're going to see almost like a melt up, where it's like the stocks and like the kind of the asset-based economy is going to keep going up, while, the average Joe Schmo is going to keep losing purchasing power, and that wealth gap is going to keep increasing, unfortunately.
Yeah. And I think just to talk real quick about the AI stuff, just because that's what I'm here close to, to me, it just seems like, oh man, how do I say this where it doesn't sound completely like terrible? So, I mean, because it's true, dude. Like once you figure out how the sausage is made behind the scenes, the last thing you want to do is just like talk about it. But I don't think enough people know. I think people on the ground know, and people here in the front lines know, and who do companies. And anyways, so what you're really seeing is just these VCs who have this enormous amount of capital they have to deploy to different AI companies. Those AI companies are then in turn handing over those funds to then fund something like the chips from nvidia, right? Because they're indispensable to like the AI workloads and all sorts of other, I don't know how would you say this, other like demand in the getting LLMs and some of these agents working, right? So to me, it makes total sense where you're seeing NVIDIA go up, because like, where is that money coming from? It's coming from these startups that are raising, there's some even raising close to $1 billion now, right? It's just like ridiculous. It's like, it's insane. Like,
yeah.
What do we do? We're living in a crazy world, dude. And so this is where I think, I don't know if it's necessarily a good use of capital, but it's already getting divvied out. And that's what you were seeing. It's just that happening. It's just like one hand handing it to the other, that's then handing it to the other. And dude, I don't know if this is an ouroboros at this point, where it's just like feeding itself. It might be. Like, I hate to say it, like something tells me that's what this is, where like I suspect that's what's really going on, and like no one will come out and say it. I have no proof of it. I have I can't really put my finger on it. But it feels like that's what's going on. Just snaking in its own tail over and over and over again with this AI VC stuff. I'm not saying all of it, but I'm saying it definitely feels like that.
Yeah, I mean, it's 100%. I mean, it's like once you get, with people with money, those circles get smaller and smaller and smaller. As I'm sure you've kind of realized in like when you're interacting with a lot of these VCs. It's like at the end of the day, these people kind of like do business with the same kind of people. And then, it just kind of keeps, I guess, moving in on from that aspect of things. So I think, I wouldn't doubt it at all if that's kind of the case, where just people making deals with whoever. And then, it's the same kind of cycle, and it's just back and forth. And then it's like, all right, we'll scoop up a little bit of money on this round, and then we'll scoop up a little bit more on the next round, and then we'll kind of keep scooping it up until like, that wealth gap just kind of keeps increasing. It's like that never ending cycle, right? I mean,
Yeah. And then,
once crises come through, it's like
yeah.
the rich get richer and the poor get poorer.
But then it's not even wait till you get to like the merger and acquisitions portion of it. Cause like we're just in the beginning stages of it. We're in the place where they set the table and set the matches, and then wait till it gets to the M&A part. Right. And then everybody wins at that point. And this is why I keep like, this is why it looks like that what I just described. I think the only way to kind of throw the grenade in the system, I don't want to use that word specifically, but I think the only way to actually do that is by having Bitcoin businesses that actually have a sats flow generating product, or have continuous sats flow with whatever they're building. And I think that's the only way to kind of disrupt all of this. That's why when I look at some of these Bitcoin companies that are coming up, I'm just like, cool, where's your sats flow? Like, where's your sats flow part of this business? Like, cause that needs to be front and center, cause that's the only thing that's actually going to be sustainable over time, especially as you grow into this ecosystem that's still new and that no one has really caught on yet outside of, our own little Bitcoin bubble here. So that to me seems like the only thing that could actually kind of throw a ratchet in everything. Cause they'll be like, because after a while, these dollar amounts, maybe it takes 5 years, maybe it takes a couple years, maybe it takes a decade. These dollar amounts are just going to be, who's going to have dollars anymore? Like, who's going to, I don't know.
Well, of course, what you lined out there is it's kind of almost like a novel concept in the tech space. It's like, where's your money coming in? Basically, the sats flow is kind of how I envision that. Where it's like a lot of these tech companies, they have the Amazon model where it's don't make money for a long time, just keep dumping all the money that you're making right back into the company. And then eventually you'll figure out a way to kind of make money. And it's like 5-10 years down the road. Whereas like a lot of these Bitcoin companies, the ones that I can see that are like, smarter about it, they're like, actually like, that doesn't make sense to run a company on a debt-based system for, years on end and then kind of hope you make money. It's like, why don't we figure out how we can make money from the beginning? They're
making 1 million sats a month, 2 million sats a month, 10 million sats a month. Like, I mean, whatever it is, they're going to be making that amount on a recurring basis, on a monthly recurring basis. So if you're making 1 million sats a month, I mean, might not seem like a lot in the short term, but after a while, that I don't know. It's what I mean, because you got to look at it, right? Like, what else out there is can you get Bitcoin every day continuously? Like, there's not a lot of places outside of mining and exchanges. But if you have a product that is able to get you some kind of SaaS flow on a daily basis, monthly basis, annual basis, all of a sudden that's just as good as a miner. Call me crazy, especially if it's the job of one or two, a team of three that can operate. I don't know. When I think of this, I think of like the TikTok model, because I'm like thinking like, how did TikTok actually become popular, and what did they actually do? Well, they raised a lot of money. They then built all these different products, different suites, and one of them hit, and it was the TikTok. But imagine that for a Bitcoin version of it. You have a Bitcoin company that then it goes and creates all these different products. One of them hits, and it's a SaaS flowing business. And I think that's where we'll see more of it. We're already kind of seeing it in the Bitcoin space, where you're just seeing a ton of these projects just iterate faster and faster and try to find product market fit. And if it doesn't work, then they go to the next thing. Right. And I think this builder culture that's kind of happening right now, it's just like, it's going to be really hard to catch these guys, because at a certain point, I don't think they're going to want dollars anymore for a piece of their company. Like, why would you? Yeah. Especially if you had to pay them back in Bitcoin. It's a certain thing. I don't know. Call me crazy.
Yeah, I mean, I think that's the way everything's trending. But yeah, I mean, I think that's always been the smarter way to run a business. But when you have a zero interest rate environment like we did from like 2010 to 2020, essentially, that's when like you can make some bullshit idea and get a bunch of money thrown at it. And it's like, I don't know, like that's where you kind of like get the stupid ideas. You get the things that don't really make sense, where you can hand out people, 12% interest back, on whatever dog shit token that you got because it's a funny meme. Like, that's where you get those ideas is when you have that kind of an interest rate environment. Bitcoiners don't really think about that in that sense, right? They always think, at least from the ones that I've kind of spoken with, they think of, how can I get this SaaS flow, cash flow, whatever you want to call it, coming in? How can I get that, that Bitcoin coming in? And like, no, I'm not going to anticipate, venture capitalist money to kind of prop me up for all this long period of time. It's like, no, I need to be self-sustaining and like, almost like a self-sovereign business. Sure, maybe I need a little bump at the beginning to kind of help me get off my feet, but
it's
like,
becoming easy. Yeah, because it's becoming easier and easier now. Like we're, before AI, and this is AI's credit. We're talking shit about AI, or we're not really talking shit, but we're just, talking about AI. But this is to AI's credit. Like this is where what took 3 or 4 engineers before now just takes one, and he's able to do everything. And then now it has sats flow, and now it's generating sats every day. And then you just throw a little marketing behind it, and then before you know it, just off to the races. And that's where I'm trying to say is like, and I think that is just becoming the thing that's interesting this cycle, as opposed to the last cycle when everything was just like lightning, everything was new in lightning, everything was barely coming out in lightning. And now it's, to me, it feels like the sustainable Bitcoin business is actually coming to fruition. And I don't know who's going to want to take dollars for something like that. Call me crazy, but we'll see. Okay, so your third one was the real estate market will continue to go up as demand pressures increase. Why do you see that for?
So it's interesting, right? So I mean, Redfin has been tracking like housing affordability for, let's say, I don't think very long, maybe like 15 or 20 years, but it's the lowest it's been in a decade at 15.5%. So I don't think that that necessarily means like housing will all of a sudden slow down. But I think that, obviously we're seeing inflation still run rampant. I still think like they're going to lower interest rates. I think like right now people aren't willing to move because they have a house at 2 or under 3% interest rates or whatever. And then people are just kind of continue to sit on the sidelines and wait to buy that home. I don't think like a lot of people are, I think the supply is going down. I think people are kind of waiting on the sidelines to buy. And, once interest rates kind of come down, they're going to be like, oh, this is a good time to buy the house. And it's kind of like the FOMO buying in
21
in Bitcoin era in like 2020 that we see, right? Yeah. So then it's like housing kind of goes rampant. And then in like certain areas of the world or the states, we're going to see like housing just kind of boom up again. And I think, like I said, I think earlier about the asset stuff, I think once we get more of these assets just kind of pumping, housing is just another cog to fall. And I think like generally speaking, a lot of these neighborhoods, we've seen Austin come down a little bit. We've seen Tampa kind of stay flat. We've seen cities like Miami kind of stay flat, Nashville kind of stay flat or go down a little bit. But like, if you look at the supply and demand, it's still not really where it normally is. It's lower. Like people are kind of like complacent with renting. Rents have maybe gone down a little bit.
Yeah, I feel like rents have gone down.
Yeah. So like maybe people will get more complacent and still kind of stay. But I think at the end of the day that people still want to own their own home. And I think like people are kind of like waiting on the side. I know a lot of people that are kind of like waiting to buy homes. And I think, like I said, that a lot of institutional buyers are kind of scooping up and they're kind of waiting for that housing market to kind of go up and create some competition. Once that interest rate goes down, those institutional buyers who are kind of parking their money are going to anticipate, maybe a 50 grand or $100,000 increase on that purchase price in like, just a short period of time. So that's where I kind of think that things are going. And that once interest rates go down and I gave Trump a compliment at the beginning about what he said about the dollar, but he also said he would want a zero interest rate environment basically for forever if he could have it, which I don't think would be good or anything like that for, the underlying economy. Like sure, it all like booms, but I think it's healthy to have a little bit of pressure. And Yeah. So I think like, if that's the way, things pan out here in the next couple years, that we'll see the housing kind of slowly start to go, and then we're off to the races again. And it's, kind of the never ending cycle of the rich getting richer and the poor getting poorer.
Right. So I guess you're saying hold on buying a house then? That's what you're telling
I
the
mean, I
plebs?
don't think like housing will crash.
So you're
So
saying
like,
buy now?
I mean, like I said, I kind of am in under the impression like we should get away from like the real estate as a shitcoin conversation. Like, I think
Who says
if
that?
you,
I mean, I'm not saying that. Who says that?
well, Odell says that. I know he says that a lot, so maybe I'll have to go talk with him about it. But I mean, I just think, personally that, uh, you know, if you can afford the overall price of your home or what it is right now with a high enough mortgage rate, right? I mean, I think it's like in the sixes now. If you can afford that, I mean, obviously it's not financial advice or anything. If you can afford that monthly price and the elevated down payment, then you can like essentially like refinance the house when the mortgage rates drop, whether that's in a year or in 2 years or something like that. I think you actually have to, in order to refinance your house, you have to wait at least a year. So like, if you buy a house now and your interest rate's at 7 or 8 or something like that, sure, that sucks in the short term, but it doesn't mean that the interest rates are never going to go back down, right? We're not going to keep them at where they're at. And then thus mortgage rates are going to come back down. So I would say if you can purchase a home, look at doing it now in an affordable place, like or in a place like Austin or something where there's a lot going on. And if you're bullish on the city that you live in, obviously there's different neighborhoods, all that kind of stuff.
Yeah.
There's a lot of different factors that go into it, and some neighborhoods will do better than others, yada yada yada. But I think just overall the trend is like people are going to kind of start to flock towards real estate when the rates go down, and you want a period of time to purchase when there's going to be less demand and less competition. Because when there's competition, if you think a house is at, I don't know, 300,000, say, somebody comes in at 310, but you really like that house, or your wife or your girlfriend or whoever it is like, babe, I really like this house. You're going to maybe overpay a little bit more
Yeah.
for that house than maybe what you think it's worth. So I think that's kind of like, in my eyes, I think like this is a time to kind of like look at it as like almost like a buying opportunity, because theoretically it's in a quote unquote bear market for real estate where things are kind of going down a little bit. Maybe you could get something under asking because a house was on the market for, a few more months. Maybe you got somebody that flipped a house that, saw everything going on crazy in 2020 and put in a bunch of money, and maybe he's like underwater. Like I think that there's definitely probably good opportunities in real estate now than there maybe wasn't like a couple years ago, because people kind of thought that the charade would keep going. And there was maybe some inexperienced people who had more money who tried to get into it. So I think that now would be a good time to buy. And then,
So
like,
don't wait is what you're saying. Don't wait until.
yeah, I mean, I think like anybody who waits, it's like kind of like waiting to like time the market for Bitcoin, right? It's like, obviously housing's a less extreme example because there's not as much swings and it's less liquid than Bitcoin. But I would say like, yeah, if you can get into, if you're looking to buy a house and like that's kind of like your end goal or whatever, obviously everybody's financial situation is different. I just think that, real estate at the end is something that'll probably continue to go up. And it's like, one of those things where it's a hard asset. A lot of people's, a lot of people's net worth is tied up in their single family home that they've lived in for a long time. And I think, that'll that trend will continue over the long period. It's just maybe that money that you have might not appreciate as much as, the house if you were to buy Bitcoin, but you have a roof over your head, right? So I don't know, there's the positives and negatives to it too. And too, like, I mean, there's not a lot of, like, if there's a financial vehicle that would let me purchase Bitcoin where I'd only have to put like 2.5% down on, or what is it, like 3.5% down
Yeah.
on, yeah. Cause I mean, that's like in the US specifically, there's a lot of, advantageous reasons to purchase a home, right? I mean, you get tax breaks, you can get a lot on borrowed money, right? So you can, I think it's like either 2.5 or 3.5% you have to put down. And you get to borrow like, 96.5% of the value of the home at what it is right now, when that would anticipate to go up. If there was a vehicle where I could, I don't know, buy $300,000 worth of Bitcoin at the current price, only have to pay like a 6% interest rate, and I'd only have to put like, I don't know, 3.5% down. Hell, sign me up for that. But there's just not that vehicle available right now, and banks basically want to throw you money whenever they can. So I think it's
there was a company in 21 called Bitcoin Layaway. I was trying to do that.
Yeah, I mean, are they still around? Because I feel like, I feel like that would be tough to survive a bear market in that, because of the volatility of this with Bitcoin. So, I mean, I think that's
definitely an idea that's out there.
Yeah, and I mean, I think like if somebody could do it successfully, they're going to have to really be risk averse with how much like the interest rate that they're giving. And I don't know if it would be worth it to like a pleb initially, but it's like, hey, if you can give me a mortgage on basically like that's what it would be, right? It would be like a mortgage on a bunch of Bitcoin. I would take that 10 out of 10. Like, I mean, I bought a house September 2020 and my interest rate's under 3. Like, and imagine if I was able to do that and buy Bitcoin with that, and interest rate under 3, and just purchase, like, all I'd have to do is just pay back that interest or pay back that payment every single month, opposed to buying Bitcoin. Like, the Bitcoin I bought was locked in at that price.
Oh, yeah. That was the whole thing back then. Yeah. If it would be locked in.
Yeah.
I just feel like even back then I said this too to that person, but I feel like, yeah, what you're saying is right. And it makes sense. But especially if it wasn't designed in like I hate using the word smart contract, but in a way to where no one else could touch that Bitcoin, then I think you're in for a world of hurt, because it probably wouldn't be there by the time you paid it back, I would imagine, because it would go through a bear market or something.
I mean,
that was always my biggest thing. Like, was like, how are you going to avoid that?
Yeah, you would have to have it in like a multi-sig or something. I don't know. That would be something where it's like, I wouldn't really trust that either, to be honest with you. But it's like, and you'd need somebody with a lot of upfront capital too. That would just be like, or a lot
That's
of
the
Bitcoin
other big problem.
Yeah.
Somebody will figure it out. And we'll see if it works or not. I think, okay, so the last thing was, this is your number 4 prediction. Man, you really went heavy on these predictions. This one's Bitcoin will surpass 100K USD.
Sir.
I think that's definitely happening.
Yeah. So, I mean, I don't know.
It all comes back to Bitcoin.
Yeah. I made this prediction on, I was on like a live stream with Julian, Kinetic Finance. And I said 100K or like one, the bet is, if Bitcoin goes above 100K, he has to eat 2 ghost peppers, and then
that could kill him.
Yeah, if it doesn't happen by the end of the year, I have to eat 2. So, with this recent run up, though, I'm feeling good. At that time when I made that bet, I had a lot of like, I guess like,
it was at 50K or something, or what?
I was just kind of doing it maybe for the content. Maybe I was feeling myself at that moment, but I doubled down here. Because I mean, if you look at all the other factors that we lined up, the stuff that we talked about, I mean, I just don't know how you cannot be bullish on Bitcoin on the price action, right? I mean, I know, like, say what you want about price, right? I know we all don't really care about it until until we do, right? But the biggest indicator is the number go up, right? That's when the normies will start to pay attention. BlackRock and 11 ETFs or 10 other spot ETFs have come in and, have just started dumping just billions of dollars into Bitcoin. I mean, I lined up this scenario, like if they continue this flow, which it doesn't seem sustainable, but if they do, all the Bitcoin is going to be scooped up by the end of this year that's on exchanges. So, with that being said, spot ETFs are still buying like crazy. They bought 10K worth of Bitcoin on Wednesday, whatever, a week ago, like one of the last days in February, in one spot ETF. I think the FOMO that we're going to see in this cycle is going to be absolutely insane because there's just so much more access to Bitcoin. And on top of it, we have the halving and potential interest rate cuts. Like at the mere speaking of like the thought of an interest rate cut, you always see the market go up because everybody's like, oh, here comes the cut. Here comes the cut. And all Powell said at that time was they think that they're going to cut. The market's been screaming for this for a while. And I think that they're just ready to see Bitcoin fucking take off and go to the moon. Pardon my French. But I think I just think it's just going to continue. And there's just, man, I just when I wrote this article, see, look at this. I wrote this in February.
Yeah. This is good, dude. You were right, man. You got a lot right here.
Yeah.
This is why you should write more. Dude, I've been telling you for like a year now. You need to write more.
Yeah.
Because you're right. You're right.
The price on it, right? I look at the price on there and it's 50,900. So, by the time we're recording this, it passed 69K today.
Yeah.
It dumped off a little bit, but look at that. That's like almost like a 10 or 20% increase at that point. So, it's crazy and it's going to keep pumping. And I saw a tweet from Dylan LeClaire the other day.
It's your boy.
It's like, yeah, he's very smart. He's a lot smarter than me and younger than me, so I don't know how he does it. But he's the last 4 all-time highs. How long it took to double? December 2020, it took 18 days. March.
Wait. Say this again slower. So you said what?
So since the previous all-time high, when it basically when the market went down and then back up.
Okay.
Right. So when it hit that all-time high and then it touched it again, how long it took to double from there, for the price to double. In December of 2020, it took 18 days only. So we went from whatever it was, like the previous all-time high of like 17K, I think it was, to 34K. It took 18 days. In March 2017, it took 84 days. We got close to doubling and then it kind of reversed and it took a little bit longer. In November 2013, it took 10 days. And in March of 2013, it took 18 days.
Yeah.
So no matter if it's longer than that, it worst case scenario, it took a little less than 3 months.
So you're saying that Bitcoin will double in less than 3 months. Worst case scenario. Best case scenario, less than 18 days.
Yeah, based on the data from the previous stuff, just looking at the trends, right? So I don't know, Carl. I don't know when you're going to put this out, but
we'll put this out tonight. It's going out tonight. It's been a while since I've done this really pod.
We're recording this on the 5th of March. We could be sitting at Bitcoin Nashville late July, just with the pinkies out with Bitcoin over 130K. It could be something crazy. And I think that, at this point in time, we just haven't seen traditional finance come in with that much money and that much FOMO because as much as we we're able to front run traditional finance, just see how much money they're dumping in, dude. Yeah. It's incredible. It's not slowing down, I published this article 3 weeks ago, and it's already up 20%. So it's just crazy. It's crazy.
I have a bet with somebody here in town that's going to get 100K before my birthday. So
when's your birthday?
I don't want to dox myself, but it's this month.
Okay. All right. Well, hey, dude, you never know.
I think it's possible. I totally think it's possible.
If your birthday is less than 18 days, then
I totally think it's possible. I'm looking at what happened today, and I'm just like, what is going on, Brandon? This is insane. Dude, I'm even getting emails now from because we're doing Startup Day next week. So now I'm getting inbound crypto emails from all sorts of people, crypto VCs, crypto media, crypto. Now all of a sudden, crypto whoever, just all sorts of crypto stuff. And then now it's also the people for the Thriller stuff. They're emailing about their crypto OGs and they want to come on the show. talk about
Oh,
crypto
yeah.
stuff. So we're there. We're at that part of the cycle, whatever that part is. It's the
I get a few of those emails too, Car, about the crypto guys.
but have they picked up? It's picked up. Has it picked up for you?
I don't know. I get them like they're spotty, but they're persistent. So I don't know. I always just reply like thanks, but I'm a Bitcoin only kind of guy, so I don't know. Man.
I just ignore them or just delete them. What's the point?
Yeah.
What's the point of having a conversation with them?
Yeah, that's fair. I don't know. It's just maybe I should start annoying. Maybe if like too many of them start to come in, I'll just ignore them. But I'm at the point now where I don't get enough emails. Well,
it's scary when they show up to your door, and then you're like, oh shit! Like, I guess you shouldn't have ignored them.
Yeah.
Hey, we're gonna be fine, Brandon.
Yeah,
100K Bitcoin before the end of the month is not bad.
Bear market, we made it through the bear market.
Technically, we did, right? Yeah, you're right. What a long one. Gosh, that sucked. Let's not ever do that again. Promise.
I don't know, man. I don't know if this may be another long conversation, but I don't think we're done with the cycles. Maybe I'm wrong. Maybe I'm kind of.
What do you mean cycles?
Like the 4-year kind of cycles, the business cycles.
Yeah, right? I think there's always that. Yeah, I think why is somebody saying there's not going to be that?
Well, I don't know. I think like a lot of Bitcoiners kind of think like this is the last one. It'll be a super cycle, et cetera, et cetera. I don't think that we'll ever kind of like reach to that point until we get maybe to a full Bitcoin standard. But I think like that's like a euphoria kind of state. Yeah. I don't think that
because people are always wrong. They were saying that last cycle too. Usually the same ones.
Yeah. Who is that? Like Dan Held got big for saying that. I just don't think that that's ever going to happen.
He only comes out around this time of year anyway. So it's like right before it kicks off.
Yeah, and then he'll make some tweet about how the crypto parties are always better than the Bitcoiners party.
And then he'll leave. He'll leave right at the crash, and then we'll never see him again until 3 years later, 2 years later.
Exactly.
This is what happens.
I think did the same thing.
This is what happens. Brandon, thanks for coming on the show. Love your predictions. For everybody that wants to go and subscribe to Green Candle Investments, check out the Substack. It's greencandleinvestments.substack.com. If you want more of this, man, he's on Twitter. He's on Instagram. He's on YouTube, dropping YouTube videos every week. He's also on TikTok. You're a TikToker now, looks like.
Yeah. Maybe some of the plebs are going to hate me for being on all these things, but the way I view it is like, obviously I'm in the content space, but I'm trying to.
Have you gone viral over there?
Huh?
Have you gone viral on TikTok?
No, I haven't figured that out yet. So if anybody knows how to figure out TikTok, feel free to shoot me a DM or something. Yeah, follow me on TikTok. It's at Green Candle IT on everything. But I gotta go where the normies are at, man. Cause like this is another like longer tangent, but I've kind of tried to put a lot of focus on the YouTube because
how's that doing?
It's doing really well. It's like taking off. Like I had maybe like 700 subscribers in October, and now I'm like I'll probably get like 3,000 by the end of this week. So it's
logo looks good.
And but I mean, if you go to YouTube just in general and you search Bitcoin and that's it, you'll see all these crypto chart boys kind of like talking about Bitcoin. So I think personally that Bitcoiners are kind of failing when it comes to reaching and onboarding a lot of the new present or the newer Bitcoiners, because if we get into the echo chamber, we stay on like on all these places. Like granted, I know where things are trending and they're probably trending towards Nostr or some of these things like that, but you got to reach and grab on the normies where they're at in order to orange pill them. So that's why I'm kind of on all these different platforms trying to do my best to scoop them in and hopefully get them off of that platform so they can welcome to the orange
side. You got some high views on this, man. I see Greg Foss. Have you thought about just cutting these up into like 5-10 minute segments, or have you already started doing that?
Yeah.
Obviously you don't have the time for it. Yeah, but like
I need to quit my fiat job and hopefully do that here soon. But the goal is by the end of this year. So I'm putting it out there. Hopefully I'll be just going full time and going for Green Candle by the end of this year. I think that's obtainable, but
totally obtainable. In this bull run for sure. You'll get there. You're going to be at a startup day next week. You're coming to Austin. You're going to be moderating some panels. Yeah, looking forward to hanging out, man. All the guys here. Everybody's looking forward to seeing you.
Yeah, for sure. If there's anybody in Austin too that's like listening to this that I don't really know, don't be afraid to come up and say what's up. And then, be happy to, I don't know, share a beer, one of the sparkling waters there in Club Lab and just kind of hanging out, dude. I'm excited to be back in Austin. It's always a good time. A lot of great panels, and you did a bang up job setting this up, dude. So I'm excited to see it all come to fruition and see those top builders too, man. I'm excited to see some of these projects.
Yeah, one person arrived early, so he's already here building away, and all these other guys are like locked in. Everybody's serious right now. Tensions are high here in the lab. Tensions are high. They really want that Bitcoin. They really want that trophy. And
they're in it, man. I like it.
Right now, I feel like I'm just in the eye of the storm where it's just like it's still quiet and it's just gonna come ripping through like a twister. We'll see.
Yeah, man. Well, hey, competition, pressure makes diamonds is what I like to say, right? So,
sure does.
Yeah, that's good for you.
All right, Brandon. Well, thanks for coming on the show. And man, like always, appreciate you. And thank you for all that you do in the Bitcoin space. Love the interviews, love the forecasts, love the updates. Yeah.
Yeah, man. Thanks for having me on. And for those listening too, stream Carson Sats, man. He's working hard. He's doing what he can for the space. The man is a legend to say the very least. And man, he's always he's out there grinding, man. He's doing more than he. I don't know, man. I think more than the average person, to say the very least. So I mean, Carr is just out there just working his ass off day in and day out, weekends. I know, man, you're going for it, dude. So it's always inspiring to talk to you. And man, I'm looking forward to hanging out with you for a couple of days down in Austin.
For sure.
I like people who I can open up to. Who don't judge for what I say, but judge me for what I do. And when I think of people I look up to, my runner, my man. My runner, my man. I laugh when you say the wrong thing, bouncing off to everybody else, but they hit you with the